first Fed cut since 2024. What it means for crypto, stocks, and the $7.3 trillion waiting on the sidelines. The U.S. Federal Reserve just lowered its main interest rate by 0.25%. The new range is 4% to 4.25%. This is the first cut since December of 2024. Policymakers expect to cut rates 2 more times before the end of 2025. Why change now? The U.S. economy is showing clear signs of slowing down. Growth has cooled. Fewer new jobs are being created. Unemployment has crept up. Inflation is still around 2.9%, a bit higher than the Fed would like. The Fed's message is clear. Waiting any longer could hurt jobs more than it helps control inflation. Not everyone agreed. One member, Stephen Moran, wanted a bigger cut. He pushed for 0.5% instead of 1/4, but most of the group agreed on the smaller cut. The market noticed right away. Bitcoin jumped about 1%. It's now trading between $116,000 and $117,000. If Bitcoin can break past $117,000 to $118,000, it might try for new highs. If not, we could see a drop first. Ethereum stayed steady, moving just a little. Stocks, gold, and Bitcoin are all near their highest prices ever, and that doesn't happen often. Meanwhile, about $7.3 trillion is sitting in money market funds. If interest rates keep dropping, some of this money could move into stocks and crypto, adding even more fuel. What did Powell say? Most people expected the rate cut, but the bigger message is in the Fed's future plans. They expect more cuts next year. Investors see this as the start of easier money. That's what really matters. Still, inflation hasn't disappeared. Powell's tone was careful and serious. That's why markets bounced around right after the news. Tech and market details. Bitcoin's network is stronger than ever. The hash rate is over 1 zettahash per second, a massive number. Mining is more difficult than before. Usually these records mean Bitcoin is safer, and they can be a signal for future price jumps. There's less Bitcoin sitting on exchanges, meaning fewer people are ready to sell. At the same time, stablecoins are piling up. Cash waiting to move into Bitcoin when the moment feels right. Options traders are betting on high prices for year-end. Many expect Bitcoin at 140 to 200,000. For Ethereum, targets range from 5 to 6,000. That optimism comes from the Fed's pivot and steady ETF demand. Seasonal patterns. September is usually tough for crypto, but the last quarter of the year, historically stronger. Many think this slow month could just be a pause before another big move. Regulation and legal news. Gemini and the SEC have made progress towards settling the Gemini Earn case. The judge paused the case to let both sides finalize terms. If it goes through, it could shape how interest-bearing crypto products are treated. Gemini also just listed its stock on NASDAQ. It priced at $28, opened at $37, and gave the company a value of $4.4 billion. The IPO was oversubscribed, showing Wall Street's appetite for crypto. Big company moves. MicroStrategy, now simply called Strategy, added another 525 Bitcoin this week. They used preferred shares to fund the buy, not common stock. In total, they now hold over 600,000 Bitcoin, more than $70 billion worth. Galaxy Digital scooped up about 3 million Solana in just 2 days, worth around $700 million. That move helped push Solana's price up 19% in a week. Even Mike Novogratz called it the season of Sol. Forward Industries went even bigger, buying nearly 7 million Solana, valued at $1.6 billion. That instantly made them the largest public Solana holder, with backing from Galaxy, Jump Crypto, and Multicoin Capital. Sol Strategies, formerly Cypherpunk Holdings, also listed on NASDAQ. They run validators and hold more than 435,000 Solana, worth about $100 million. Looking ahead, history shows that after the Fed cuts rates, Bitcoin often rises within the next 3 months. Not always, but more often than not. Combine that with ETF flows and institutional buying, and you can see why some analysts predict Bitcoin reaching 700,000 by 2035. Of course, those predictions assume the Fed keeps cutting and no major shocks derail markets. Short-term swings are likely, but the long-term picture still leans positive. The takeaway: this wasn't just another Fed meeting. This was a real change in direction. More liquidity is coming, and crypto stands to benefit. Bitcoin is pressing a major resistance zone. Ethereum still leads with staking. Solana just secured serious institutional backing. Expect sharp ups and downs in the next few weeks. But the tide has turned, and it favors crypto.